Welcome to the deep dive where we take your sources, extract those crucial nuggets of knowledge, and, well, help you get informed fast. Today, we're uncorking a really fascinating topic, one that maybe flies under the radar a bit: fine wine as an investment. We've got a great market analysis here from Best Wines to Invest in 2025 and a bunch of other insights to guide us. Now, when you think about investing in prestige items, your mind probably jumps to, classic cars, fine art, maybe luxury watches. But our mission today is to explore why fine wine, often sort of relegated to that alternative category with rare coins and stamps, might actually offer a better return than some more volatile assets. We're going to navigate the market's recent turbulence, look at what's driving demand globally, and yeah, highlight some surprising facts that make this a really rich area if you're looking to diversify.
Absolutely. Fine wine, it really does blend passion with profit, doesn't it?
Yeah.
And the market, well, it's certainly seen its share of drama lately. We saw that huge surge starting mid-2020, peaking late 2022, but then 2023. Well, as one source put it, it was as musty and lackluster as a corked bottle. Prices basically fell back to 2021 levels. Now, economic uncertainty, it's generally not great for luxury goods, but to really understand what's happening for 2025 and beyond, we need to dig a bit deeper into why these swings are happening.
That's quite an image, a corked bottle. So, okay, what exactly drove that initial massive surge in wine's popularity? And how did we get from that high point to, well, such a disappointing 2023 for a lot of investors?
Well, the interest wasn't entirely new. It actually started going back around 2018. That was a year the record for the most expensive single bottle was broken, what, 5 times?
5 times, wow.
Yeah. But the real acceleration, that kicked in mid-2020. You had all that pandemic-related financial turmoil, and investors started looking hard at alternative assets. Fine wine just became this hot ticket, pushing prices to record heights by late 2022. But that kind of growth, it's rarely sustainable, is it?
Yeah.
Which led to the big market correction we saw all through 2023.
Right. So a classic boom and then, well, a bust. But our sources are saying this isn't totally uncharted territory for seasoned wine investors. What can history tell us about recovery?
That's exactly right. The big question everyone's asking now is, can returns bounce back in 2025? If you were new to wine investing, 2023 was probably, quite a shock. It was the first really serious correction in about 15 years. But veteran investors, they'll remember the period after the 2008 financial crash. Respected critic Jancis Robinson, she noted back then how many a banker and hedge fund manager liquidated his fine wine investments, flooding the market, particularly with Bordeaux. Prices tanked. Then they rallied really strongly to new highs by 2011. And then that same year, an unprecedented 15% decline, a real roller coaster.
That historical context is so important. But okay, how were those past crashes like 2008 or 2011 different from what we're seeing now? And what does that mean for you thinking about investing in 2025?
Yeah, the circumstances were quite different. First off, 2008 was a full-blown global financial crisis. Experts mostly agree we're not technically in a recession right now.
Okay.
Second, that 2011 peak, that was largely, almost overwhelmingly, driven by the Asian market, especially China. But then these anti-corruption measures kicked in within China, and suddenly a huge chunk of those buyers disappeared. That led to a staggering 36% drop in the LIVX 100. That's kind of the fine wine equivalent of a stock index over the next 3 years. It took a long time to regain confidence.
Right.
So the key takeaway for you, the investor, is that, these corrections hurt. But they weren't the end of the market then, and this current downturn likely isn't the end now in 2025 either. History shows resilience, not total collapse.
Okay, so resilience is the theme. We've looked at the history. Now, looking ahead to 2025, what specific factors are shaping the fine wine investment scene right now? Let's start with something basic: liquidity. How easy is it actually to sell your bottles when you want to?
Liquidity. It's definitely complex in fine wine. It doesn't have the kind of volume you see in the stock market, not even close. Cashing out can take weeks, sometimes much longer if you're dealing with more obscure bottles. Online platforms have certainly helped, made things better, but it still really depends heavily on the vintage, the producer, the rarity.
So Premier Bordeaux might move okay, but maybe some Burgundies are tougher now.
Exactly. Demand for top Bordeaux is still pretty strong,
Yeah.
relatively speaking. But even some well-regarded Burgundy wines are harder to shift than they were just a couple of years back.
Hmm.
The crucial thing here is you need to factor that longer time frame into your investment horizon. It's not an overnight flip, usually.
That makes sense. But you also mentioned a new significant source of demand popping up. What's driving that?
This is where it gets really interesting. It's the sheer rise of global millionaires. We're talking somewhere between, what, 47 and 60 million worldwide?
Wow, that's a huge number.
It is. And while a lot are still in the U.S., the map is changing fast. China, maybe surprisingly given recent history, has exploded back onto the scene as a major buyer. They account for something like 75% of the APAC wine market imports and maybe 30% of global imports since 2009. However, it's worth noting the recent collapse of the Chinese housing market. Well, that should give investors pause about banking only on returns from China.
Good point. Diversification needed even there.
Absolutely. But then you look at the other BRIC nations, Brazil, Russia, India. That term for major emerging economies, they represent about 45% of the world's population, and they're showing a growing appetite for fine wine, too. This broader base of wealth globally is a critical long-term driver.
Okay, so global demand seems to be broadening, potentially increasing long-term, and production is inherently limited, right? Land, regulations.
Right.
That sounds like a pretty good fundamental recipe for long-term value appreciation. What about the wider economic picture, things like money supply? How does that factor in?
Precisely. And this is where fine wine really shows its strength as a diversifier in a portfolio.
Right.
It has this historically low correlation to the broader stock market. That makes it attractive, especially when the economy feels uncertain. Now, look at interest rates. They seem to have peaked. Global core inflation is expected to be around 3% in 2025. Cheaper capital generally leads to a higher global money supply. And historically, that tends to mean higher demand for luxury goods, including fine wine.
Ah, I see the connection.
Yeah. Our sources from Wine Academy point to a pretty clear link between money supply and that LIVX 100 index. They note the investment market often lags monetary policy by about 9 months. So what that suggests is, while we might still feel the hangover from high rates in the first half of 2025, we could see a pretty strong rally by the end of the year. The nugget here is that these big economic shifts hit wine too, just with a bit of a delay.
So, with prices having fallen back to 2021 levels, does that make it something of a buyer's market right now? Is this the moment maybe to jump in if you've been watching?
It certainly looks like an excellent time to enter at a more reasonable price point, yes. The declines we saw through 2023, they really slowed down, showed clear signs of stabilizing in the last quarter of that year. It doesn't feel like a catching a falling knife situation anymore. The overall trends, especially those long-term demand drivers and the potential shift in monetary policy, they strongly suggest the market will recover. Getting in now at 2021 prices could look like a very savvy move down the line, potentially offering good future profits.
Okay, let's switch gears a bit. There's a trend hitting every single industry. Sustainability. How is ESG, environmental, social, governance, impacting fine wine investment?
Yeah, ESG is huge now. Like a lot of luxury investments, antique cars, diamonds, fine wine, is really having to embrace sustainability. And it's not just about consumers preferring it, though that's part of it. It's actually becoming prescriptive. The key insight for you as an investor is that these ESG ratings are now directly affecting wineries' access to things like distributors, credit, even government grants in the U.S. and EU.
So it's not just optional anymore.
Not at all. ESG compliance is becoming a non-negotiable gateway to the market and to financing. It's fundamentally changing how wineries have to operate. And that, of course, influences their long-term value and their appeal as an investment. So if you're building a portfolio, it might be smart to actively look for and maybe diversify into the ESG leaders in the wine space. They could represent a more secure long-term bet.
Interesting. And what about the actual wines themselves? Are we seeing a kind of new wave of winemakers shaking things up, challenging the old guard?
Oh, absolutely. There was a 2023 report, the Gerard Bassett Global Fine Wine Report. It found 85% of market players are actually positive about 2025. They cited strong demand, growing expertise among consumers, but a really significant factor they mentioned was the rise of these new winemakers. They're focusing on artisanal wines, often from less famous, maybe New World regions, and they're catering to a younger, more modern palate. Think lower alcohol, fewer calories, less oak, less tannin.
Right, a different style.
Yeah, and a big trend towards organic production, eco-friendly packaging, the whole package.
So these newer players, they don't have centuries of prestige behind them, but they're using things like digital marketing telling their story.
Exactly.
That really challenges the traditional model, doesn't it? A limited run vintage from the right new estate, maybe at a more accessible price initially, could genuinely become one of tomorrow's classics.
Definitely. It represents a real shift in what defines collectible. Investors should absolutely keep an eye on that space.
Okay, so we have these market cycles, new global demand, the push for sustainability, these emerging winemakers. Putting it all together, What are the big opportunities for you as an investor looking at wine in 2025?
Well, one key opportunity, as we sort of touched on, is potentially timing the bottom. You know the old saying, time in the market is better than timing the market, and that's generally true. But declined prices do offer that chance to buy low, sell high. With prices sitting around 2021 levels, maybe even below in some cases, this could be the bottom or very near it, which means taking a 5 to 10-year view from here could be very profitable indeed. The stability we're seeing suggests it's a calculated risk now, not just a wild gamble.
And diversification is key, not just into wine, but within a wine portfolio itself, right?
Exactly. Fine wine is already great for diversification because of that low correlation to stocks we mentioned. But within your wine holdings, yeah, you absolutely need to spread your risk. What's interesting now with the recent price drops is that some rare, high-cost bottles from the big established houses are actually more affordable than they have been in years. And they've tended to decline at a slower rate than some of the newer, maybe more speculative wines.
Yeah, okay.
So this might actually be an excellent time to add some of those blue chip names to your collection, balancing out your portfolio.
Does that mean everything is going to bounce back equally? Or do you need to be quite selective about which bottles you pick?
Oh, not at all. We're definitely looking at what you might call a stock picker's market or maybe a bottle picker's market here. Some wines, some regions, they're going to rebound much stronger than others. LiveX, that global marketplace, uses a bid-to-offer ratio. It basically shows how many buyers there are for every bottle listed for sale. At the end of 2023, Bordeaux was showing strong demand, like 1 to 2 buyers for every seller. Burgundy, though, it was more like 1 to 9.
Big difference.
Huge difference. It points to a clear flight to quality towards established names. It really emphasizes you need to do your homework, look beyond just broad categories like Burgundy. The insight is, don't just buy any wine hoping it'll go up. Buy the right one based on current demand signals.
Okay, that makes sense. Now, what if you're intrigued by all this, but the idea of becoming a cellar master, managing storage, dealing with vintages, what if that's not for you? Are there other ways to get involved?
Oh, definitely. There are many choices now that lower the barrier to entry quite significantly. You could use wine investment companies or maybe professionally managed wine investment funds. They basically handle everything for you. The selection, sourcing, the secure storage, eventually the selling. You get their expertise, but you pay a fee, of course.
Right.
Or you could consider wine bonds. These tend to offer fixed returns over a set period, so it's a more predictable income stream, less about capital appreciation.
So you can actually invest in wine without ever physically touching or even owning a specific bottle.
Precisely.
Yeah.
That's where the wine stock market, so to speak, comes in. You can invest in big luxury conglomerates like LVMH. They benefit hugely from champagne sales, for instance.
Yeah.
Or you can look at wine-related exchange-traded funds,
Yeah.
ETFs. There's the WAN Fund, KWUS, or maybe the iShares Global Luxury Goods ETF, IGLX, for broader luxury exposure that includes wine. Newer options are popping up too, like fractional wine ownership. This lets you buy a share of a really rare, expensive bottle with a much lower entry point.
It's interesting, like fractional art ownership.
Exactly the same idea.
Yeah.
Though, these platforms are still relatively new, they need to build up a solid track record. And then for the really sophisticated investor, the one with a high risk tolerance, there are wine derivatives, options, and futures. But let's be clear, these are complex financial instruments. They come with high fees, big risks, and you really need deep knowledge of both financial markets and the wine market itself. The key insight, though, is that wine investment isn't just for hardcore collectors anymore. It's becoming much more accessible.
Okay. Let's pivot now to some of the really captivating stories, the lore around wine. Starting with those jaw-dropping prices for bottles at auction. These aren't just assets, they become legends, right?
They really do. Auction houses like Sotheby's, Christie's, they've seen prices just go stratospheric. Like in 2020, there was this Kingdoms assortment, a Methuselah, that's a huge bottle of 1985 Domaine de la Romanée Conti. It sold for $1.02 million.
$1 million for wine.
Yep. But what's fascinating is not all these million-dollar sales are purely about investment potential. There was a 2019 Cabernet Sauvignon, the setting glass slipper vineyard, fetched $1 million too, but it was at a charity auction. The bottle was almost a bonus. The donation was the point.
Context matters.
It does. Then you have the DRC 1945 Burgundy that set the single regular bottle record at $558,000. Or the infamous Chateau Margaux 1787, supposedly once owned by Thomas Jefferson.
Oh, I think I know the story.
Yeah, tragically dropped right after being bought at auction. Can you imagine?
Oh, the pain. A very expensive accident.
Exactly. And then there's that 1907 Heidsieck champagne, the Diamond Blue. recovered from a U-boat wreck. That shows how an incredible story, that unique provenance, can add massive value and allure. The insight really is that the narrative around a bottle can sometimes be just as valuable as the liquid inside it.
Can you just picture the collective gasp in that room when the Jefferson bottle hit the floor? A terrible lesson in handling delicate investments. Okay, beyond these eye-watering prices, what are the fundamental advantages of investing in fine wine compared to, say, other luxury assets like art or classic cars?
Well, one big one is its resilience. It tends to weather economic storms pretty well, partly due to that niche appeal and the passion of collectors. Another advantage, maybe a surprising one, is that it's relatively low maintenance. Unlike art that needs specific lighting and climate control, or classic cars needing constant mechanical work and pampering.
Right, always something needing fixing.
A fine wine just needs a cool, dry, dark place. It basically accumulates value while sitting still. And crucially, it possesses this inherent rarity that can never be replicated. A 1937 Magnum of Bordeaux, for example, will never be replaced by a newer, better 1937 Magnum. It just is. That finite supply, especially for great vintages from top producers, is a really powerful driver of long-term value.
So, what specific things should you look for? What characteristics make a wine truly valuable for investment, beyond just the dramatic stories or the age?
Okay, you need to look closely at several key factors. First, place of origin. Prestigious wineries like Romanée-Conti, they carry immense weight. Age is obviously key. Many valuable bottles are decades, even centuries old. Provenance. This is critical. That verifiable proof of origin and the ownership history. Absolutely essential.
Can't fake that. Well, shouldn't.
Exactly. Then consider the specific region. Traditional powerhouses, yes, France, Italy, Spain, but also, increasingly, places like California. Terroir. That French word that covers the unique mix of climate, soil, terrain, it profoundly affects the taste and the long-term value. The year of the harvest, was it a good year for that region? That matters a lot. And finally, its appellation or classification. That carries huge reference and influences popularity. The insight here is that these aren't just tasting notes for wine buffs. These distinctions are the fundamental pillars driving demand, especially in those growing global markets like Asia with their rising number of ultra-high net worth individuals.
This naturally leads to the flip side. What are the risks? Because wherever you have high value, especially with complex provenance, you've got the potential for fraud, right? Maybe even worse things.
Indeed. Faux fine wine is a significant risk. It ranges from, scams back in the early 2000s to really sophisticated counterfeit operations today. We've seen some notorious cases. Those Jefferson bottles we mentioned later found there was zero historical evidence he ever owned them. A stark reminder about checking provenance.
Right, the story was better than the facts.
Pretty much. Then there was Brunelli-gate back in 2008. Producers were caught adulterating their supposedly 100% Sangiovese wines with cheaper, inferior grapes. Or, even more terrifying, the 1985 Austria antifreeze scandal. Winemakers actually added lethal diethylene glycol to sweeten the wine.
Lethal. Good grief.
Yeah, and the 1986 Italian methanol scandal, which tragically killed 23 people. These historical events, they really underscore why provenance, testing, and due diligence are absolutely critical. The sobering insights that your investment's integrity depends not just on the label, but on an unbroken, trustworthy chain of authenticity.
Wow. It sounds like the human element, the potential for bad actors, is almost as volatile as the market itself. What about global politics? How does that play into wine as an investment?
Oh, geopolitical shifts have had a massive direct impact. You look back at 2013, Chinese President Xi Jinping launched that anti-corruption drive. It cracked down hard on gifting luxury items, and that included fine wine. Demand from China just plummeted, and prices fell nearly 40% from those 2011 peaks.
A huge drop.
Huge. More recently, think about the Ukraine war. That severely disrupted a big section of the wine industry, especially from Eastern and Central Europe. You've got supply chain chaos, shortages of materials like glass, higher fuel costs. It's all pushed prices up globally. And beyond the economics, there's the immense human toll. You hear about vineyards like Chateau Purcari in Moldova shifting from making wine to sheltering refugees. That impacts supply, it impacts local tourism. It just adds layers of complexity to the global market. The core insight is that wine, while we might see it as a luxury removed from daily struggles, is actually deeply intertwined with global stability and real-world human events.
Okay, so we know the traditional regions, Bordeaux, Burgundy, Tuscany, still hold a lot of sway. But if we're looking for emergent value, Where are the new frontiers for wine investment in 2025?
Well, one master of wine, James Simpson, was quoted saying very clearly that California is where the interesting fine wine is at right now. California produces, 90% of all U.S. wine? And the top vintages, because of tight supply and low production, they can achieve Burgundian values.
Meaning high prices from small, specific plots?
Exactly. That Libex California 50 index, it saw a 34% jump in the year to March 2022. Trading volume for California wines is up nearly 480% over 5 years. It's booming. Simpson's own company, Paul Roger UK, specifically sought out California vineyards like Robert Sinsky's Staglin Family Vineyard. Because they have that international respectability, they could open doors in top American restaurants. He even mentioned Oregon as another place to watch, especially for Pinot Noir. The nugget here is don't sleep on the new world's established elite. California's playing the big leagues now.
Fascinating that these American regions are now seriously talked about alongside Burgundy. What about other parts of the world making a compelling case? Any other hotspots?
Absolutely. You should look at Chile. It's the world's fourth largest wine exporter, and they've had a real revolution in the quality of their red wines. They're doing meticulous soil analysis, producing really high-quality, noble grape varieties. They have ambitious goals to increase exports of their higher-priced, fine wines, and the quality is definitely backing it up.
Okay, Chile.
And then there's Argentina, famous for Malbec, of course, but their winemakers have really shifted focus towards freshness, fruit expression, length. It's propelled their top wines into the fine wine conversation at a really impressive rate. The insight is, while France is still the benchmark, these New World regions like Chile and Argentina, they offer fantastic quality, often at potentially more accessible price points initially. They provide really interesting diversification opportunities.
Right. So let's try and wrap this up. To recap our deep dive into fine wine investment in 2025, it seems like a journey with definite ups and downs, peaks and troughs, but one that really rewards knowledge, careful research, due diligence, and probably a fairly long-term perspective.
Exactly. Remember, the historical patterns strongly suggest that if, or perhaps when, interest rates drop, fine wine collecting is likely to bounce back pretty strongly. Buying quality, thinking long-term, those are absolutely key. And taking advantage of some of these early 2025 price levels, the discounts, could be a very smart strategic move. Keep an eye out for value not just in the established classics, but also in those new emerging estates. And always, always diversify within your wine portfolio.
So whether you're already a seasoned collector or maybe you're just starting to explore this really fascinating intersection of passion and profit, it sounds like there's a place for you in this dynamic market.
Which leads us to a final, maybe provocative thought for you to mull over. Given the history of fraud we discussed, those scary health scandals, and the complex geopolitical landscape that clearly impacts wine from the vineyard right through to the final sale, what level of scrutiny should you, the modern wine investor, apply? Not just to the bottle itself, but to the entire narrative surrounding it. Everything from its regional story to its sustainability claims to its marketing. How deep does that due diligence need to go?
That's definitely something to think about as you consider what stands out most to you from today's deep dive. We really hope this has given you a richer, maybe more nuanced, and certainly more informed perspective on the world of fine wine as an investment.